Ladies and gentlemen, I welcome after many years Rob McEwen again in Munich at our Forum ONE event here November 7 and 8. Rob, it's a pleasure to have you here. Previously, Mr. Goldcorp, everybody knows you. You're a legend in Canadian mining. Today we talk about McEwen Mining and McEwen Copper, and I also welcome Michael Mading, who is on behalf of McEwen Copper here. Nice
Wonderful.
to have you.
Great to be here. Thank you.
Thank you so
Great
much.
to have you. Rob, let's talk first a little bit about McEwen Copper. You have a big stake in this, not McEwen Copper, McEwen Mining. You have a big stake in this company and also in McEwen Copper. Some people, maybe they do not know McEwen Mining. Please tell them a bit about your company. It's a gold and silver producer with a big asset in Los Azules, we know. And you just announced numbers, quarterly numbers. Please give us a summary about your key projects.
All right. I'm happy to. My investment between the two companies is $225 million. McEwen Mining has 3 gold mines, 2 of which it operates and owns 100%, and the third is controlled and operated by Hochschild Mining of Peru. So we're in Canada, in the Timmins Gold District, which is the most prolific gold area in Canada for gold. We're in Nevada, which is the most prolific area in the United States for gold. And we're in our southern Argentina, in Patagonia, which is an up-and-coming camp, and there are a number of mines that have started there since President Macri came in the early 90s. Before that, there was no mining there. But we also have a project we're starting in Mexico, restarting, and we'll do about 140,000 ounces this year. When we look out 4 years, we can see us going through 250,000 ounces.
That would have been one later question, but thank you for answering it.
And the copper project is very large. I like to convert it to a gold equivalent. So I take gold price, divide it by the copper price, and the product is the number of pounds of copper that equals the value of 1 ounce of gold. So when you do that to the resources we have of 37.6 billion pounds of copper, you're up to a 60 million ounce gold equivalent deposit. And this deposit is low cost, $1.02 a pound to produce the copper projected. That equates to just over $600 an ounce gold equivalent, and all-in sustaining would be around $1,000. You're looking at a 27-year life and 400 million pounds of copper a year, which is greater than 640,000 ounces a year. So this is a very, very large asset that has a big impact on the value of McEwen Mining. Beyond the copper and the gold mines, we have a portfolio of royalties, none of them performing at the moment, but the biggest will be a 1.25% net smelter royalty on Los Azules, which, based on the PEA, preliminary economic assessment, would generate over $400 million for McEwen Mining over the 27-year life.
That's interesting. Thanks. I didn't know that you have this royalty. But let's stick with McEwen Mining for a moment. You just announced numbers, quarterly numbers, as always, early November. And I saw there that you had a nice pickup in the operational cash flow and the adjusted EBITDA. It was a bumpy road if you go look some years back. But now it seems that you are on track to be profitable from quarter to quarter all the time, right?
Bumpy is a very generous statement. We went right off the road, it seemed. But no, we're looking, our revenue is up quarter over the previous quarter, 36%. The EBITDA was up 586%, generated positive cash flow. Our financial statements are a little hard to follow sometimes because up until the end of 2023, we consolidated all of the money being spent on Los Azules, on McEwen Copper. So in 2022 year end, we reported a $1.81 loss a share, and in year end 23, we reported $1.15 earnings. And because we went from consolidating when we owned more than 50% to below 50% and you equity account, I find it really hard for our shareholders to follow some of that. But that to say, we should be showing positive earnings once we get the feasibility study done and we have the permit to develop Los Azules, because then it's a different accounting principle. But right now we're generating positive cash flow. It was negative in the comparable period a year before, and we've got growth. We've spent heavily on exploration, and that's what's projecting that increase in production.
And you have a big silver project. Was it El Gallo, right?
Yes.
That's a significant resource. What's the plan with that?
Right now we're waiting to get a permit. We bought from another mining company some extra equipment that would allow us to process all the ore, and it was quite inexpensive. And it's not a huge production source projected, but it's a very positive cash flow. So we're going to get the permit from the Mexican government. They changed their government, and they're having problems deciding how they want to permit future mines there.
Yes. I would go to Michael Mading to add some facts about Los Azules, because he is the expert for it. Michael Rob said already something about the numbers, and those were really amazing.
Yes.
Please give us again the information. How many pounds of copper is there? Mine life, investment, some key data. It's in Argentina, so the timing couldn't be better for you with the new government, Milei, right? How do you want to proceed with Los Azules?
So in terms of headline numbers, we have a project that has a very long life of mine. That at the moment, base case is 27 years life of mine, with a nominal production capacity of over 175,000 tons installed. We'll produce in the first 2 years over 190,000 tons of pure copper that is directly industrializable. I think that's a main differentiating factor. Another very important point is that if you include our latest metallurgical data that look quite good, we had in the feasibility study, in the preliminary economic assessment, we had 72.8% recoveries, and we came out with a press release a couple of weeks back. With additional metallurgical testing, we came to 76%. Now, this adds more than $200 million to the NPV that we had in the project that was already at about slightly below 2.7 billion. That means we are now slightly short of $3 billion of NPV. When we think about this long life asset, we have a very good cost profile as well. The C1 cash costs are $1.02 and $1.57 all in sustaining, considering the metallurgical impact, and that means it's very robust to the price cycle. I think that's very important as well, that we can weather also storms along the way. We want to make this a really multi-generational project. We have partnered with Rio Tinto's Newton technology arm, which could help us to expand this already very vast resource. It's number 8 worldwide, according to Mining Intelligence. That means that this project can live for 39 or more years.
I would have asked you that. Is there exploration potential?
Yeah, that's the next thing. We have to the north. We have about 400 meters. We have drilled 2 holes that have shown interesting copper results. So we think that below what we have as a resource shell in the preliminary economic assessment, we have additional copper. And to the north, we know that there is copper, because that was the result of the drilling. And we have drilled also 600 meters to the south. So we have a project that is 2.4 by about 4.2 kilometers, where we may be able to add another kilometer in length. That's quite a significant upside potential. And then obviously the other upside potential I already mentioned with Newton's technology, which could be a game changer for our project. Now, talking a little bit about the RIGI, the large infrastructure investment regime that recently was voted into law by Congress. It was a project from President Milei, which we had the opportunity to meet in April this year for a long conversation. And that, I would say, when you have a good project, it makes your good project great. And if you have a great project, it makes it fantastic. So that is really very helpful for attracting the capital required. I mean, we have a relatively low capital requirement of about 2.5 billion for, this is a top 30 producer once it goes into production, top 30 worldwide. So that means we have a relatively low capex. You have projects in today's world that have a capex requirement per installed capacity of over $40,000 per ton. We are a little bit over 10,000. So I think we have everything from a technical perspective that makes this very interesting. And then, and maybe Rob, you want to talk about that, is our vision when it comes to being a paradigm shift in mining and changing the way people see mining and what we do.
Thank you, Mike. Several years ago, we brought an architect in and asked him to help us redefine mining and see if we could present a model that would alter the perception of the public's negative perception of mining. And one, that's to get social license. Two, it's to attract more people to the industry because there's been a precipitous drop in the enrollment in schools of mining and geology, and saying we're going to have to be competing with these people. And then saying 100% renewable electrical power, electric fleets, low water consumption, a quarter of comparable size conventional mining operation, low carbon, and creating a jewel on the side of the hill rather than a scar. So it's all about altering that perception and maybe...
And also making profits at the same time.
Oh yes, making good profit. So, but it's also, I think it's just getting the acceptance, creating something that the community, the province, the country, and the industry could be proud about.
Thanks for this update, for being here, Rob and Michael. I thank you, and I wish you, of course, best success with Los Azules and McEwen Mining.
Thank you very
Rob.
much.
Thank you so much.
Pleasure to have you.
Pleasure. Thank you.
Thank you.
Thank you.
Okay.
So.